Good morning, everybody. I remember that statement from John Frank last year too. That stuck in my head more than most things from last year. It's a pleasure to be back. Thanks to Paul Bernhard Cullen and Steffi Czerny and the great DLD team for putting on a second DLD Europe. It was a great event last year, and I'm really honored to be a part of it. I wanted to take some of the themes actually that Paul Bernhard already brought up, try and deliver a few answers to it, also ask some more questions to this issue, and see if we can kind of set the stage for some of the topics that we'll be having today and move things forward. The big headline is some ideas for how, for how to move the internet economy forward. And as Paul Bernhard said, why Brussels? I think we all know. On the right, though, it's also important to note that even at the national level, especially the German economy, the German politicians are well aware now that Brussels is the place where the decisions are made for the entire European ecosystem, which includes Germany. Also, as Paul Bernhard mentioned, yes, 1996. Thank you, Bill Clinton, Al Gore, let it be. This was the sort of landmark decision for the default setting of the internet as Americans know it, which is let's let this thing go and grow, not regulate it. It's just a little baby. 20 years later, yes, we've all seen these charts. How's that working out for you? It does seem to be working quite well, at least for the US companies. Let's look at the European economy, though. We have some strengths, right? 31% of the cars built in the top table are made in the EU. Half of the banking and insurance sector worldwide in the top table is made in the EU. I had to look really hard to find a Wikipedia chart where Europe actually dominated. I found one, which is football teams, although wait for China to get to number 20 in a year or two. But unfortunately, as everyone knows, this is where we stand. Europe has an incredible tech ecosystem. It's got an incredible internet economy. But in macro global terms, right now, we are a bit player. This can't be stated often enough. And now we all agree it's potentially a problem. What do we want to do about it? Yeah, again, we can look at those charts all day long. So 5 burning questions that are right now facing Europe and Brussels related to the internet economy. I want to run through those and then look at maybe a recipe for the way forward for the continent. The first question, of course, is to this lovely lady, and it's a pretty obvious one. Are these monopolies? I think we're all aware of the fact that market share dominance is pretty obvious in certain sectors, and these aren't tiny companies anymore. We can debate whether they're monopolies or not, or whether there's abuse of that market position here or there or not, but I think, you know, the discussion has changed, and that was already mentioned earlier. It's now become salonfähig, as Germans would say. It's now become something you can talk about openly, the M word, even in the United States. There are big discussions raging. The Democratic Party just put it in its policy platform to look at monopoly power. This is another really burning issue for the internet economy. I'm not sure if people outside the internet economy are aware of it, but this e-privacy proposed regulation, which is not yet finished, has really united the European internet economy in opposition. It's, I think, a well-meant initiative, but it's got a massive overreach. It's reaching into all areas of the internet data economy, and not only, it's reaching into the entire European economy, and we're rushing it, trying to get it done so that it can take effect when the European Data Protection Ordinance takes effect, and this is really causing a lot of confusion and pain in the European ecosystem. You know, we spent 5 years getting a really great landmark achievement done, the GDPR, General Data Protection. We got all of the stakeholders to the table and agreed. Then we proposed this e-privacy regulation with different hurdles for data usage. Now the Parliament is potentially going to come out with something we imagine might be even more stringent. Then there's going to be a trilogue. Then at some point a law will take effect. People, we're like 8 months away from trying to implement the GDPR for the entire European internet ecosystem. That's not a lot of time to get your tech platform in order. And we don't know what the rules are going to be right now. And a lot of the proposed rules are contradicting the ones in the GDPR. So this is a real problem. And it's Europe's internet and digital data economy hangs in the balance. These are Europe's own growth scenarios for its data economy. They're assuming that the data protection ordinances don't wreck the economy. So you could potentially correct a lot of these down. Another big question that we're facing right now, everyone should be talking about, this has changed the game. SoftBank's Vision Fund announced this year, $93 billion. Klaus will talk about this a little later, I think. Capital in the digital economy is now a geopolitical tool. It's something we all really need to see. This is not just a business issue anymore. This is a geopolitical tool. And unfortunately, you can complain about somebody bringing way too much money, but in the internet economy, there's no financial fair play rule. It's really winner take all. So a new game is on, and Europe has to respond. We need some success stories in Europe. We have a lot of great ones, and I think a lot of people are looking to Spotify, hopefully, to perhaps crack the top 20 for us. I put Spotify up here because I think this was their year. They really broke through. Unfortunately, the business model still isn't making money, slight detail. But they're clearly dominant, and they've built an entirely new business model, and Europe can be proud of that. Somebody came in and put it all together. But I think it would be really important for the internet data economy of Europe, for investors and for everyone to see you can start things, you can have very successful exits, hopefully an IPO this year. And of course, will it hurt? A heart of the European investment and tech community is in the UK and London. Brexit is really a lose-lose situation. The question now is essentially how much damage is it going to do? We see some chilling effects already for the VC funds in London. So this is a question we're all faced with, but the tech economy is not immune to that. So let's look forward. And in talking with Steffi, she said, let's be optimistic. I'm an American optimist anyway. So I really do believe for my children that were born in Europe that we can win in the internet space. And here's some ideas from our foundation and others as to how. First, and Klaus can talk about this a lot too, this is really key. It's great that there's public investment. Public-private investment is, of course, really important to trigger it, but we've got to mobilize private capital. You all know about our venture capital gap with the US and Asia, essentially just only getting bigger. And remember, the one in the middle is theoretically one of the world's largest Volkswirtschaften, so this is a pretty tough number. Why is VC important at all? Who cares? This is just people trading money and shares. No, it drives your GDP growth. It's really a key. It not only drives your GDP growth, it drives all of your research and development. This is a Stanford study, research they did. The publicly traded companies in the US that are VC-backed are now powering half of the R&D spending of public companies in the US. So a very disproportionate amount of the R&D happening in the entire US economy is coming from the VC-backed companies. So why is 1979 a baseline in all these charts? You see it's not a lot going on the left side there. It's actually a policy decision. This is also important for Europeans to hear. It's not just that they have more money or they're smart or somehow Americans have a different investment culture. No, laws lead to the culture. For 150 years, starting in 1830, you couldn't invest in a risk thing like venture capital. We had the prudent man rule. It was a court ruling. And because of it, there was essentially no venture capital market in the United States. When did that change? 1979, the Big Bang. We loosened it, and it became the prudent investor rule. You could maybe do a speculative investment if it was part of a prudent portfolio. So you could speculate on one thing if the other things maybe were a little safer. That changed everything. Within just a matter of years, the entire VC industry was born. It leapt 40 times within 5 years and hasn't stopped. Now venture capital simply drives the US economy. This again is the great Stanford Business School study from 2015. You see the dot-com bubble, but we're actually getting up there in terms of market cap again, although those companies are now making money. It has interestingly plateaued around 18%. Who knows if it'll go higher, but It's clearly a major part of where the US economy gets its strength. Unfortunately, in Europe, not so much, about 7 times lower per GDP. So this is what we have to work on. This is why we have to mobilize the capital. And unfortunately, it's all our fault. Europeans are putting their money in the bank. There really isn't a culture or mechanisms to get more private Europeans' capital into a system that could be harnessed. There is hope, a shout out to the EU here. They've proposed a pan-European pension product just this year, which we think could really help bring more capital into the system. And on the receiving side, there's a whole generation of great young European venture capital firms being founded and formed all across Europe. It's really wonderful to see. They raised $6.4 billion this past year. It's not as much as Silicon Valley, but heck, it's a lot more than we've had before. So this is from a great Atomico Slush study. They've put out a great study each year on the EU tech economy. And in fact, from that same study, they've shown that if you took the existing pension fund endowments in Europe right now, $4.1 trillion, if you just diverted 0.6% of it, we'd close our venture capital gap overnight. That's all it takes. In fact, this is what's so important to know. Everyone thinks because the Americans have so much money, their fund managers must be throwing money into venture capital. Well, actually, they're still prudent. Yes, there's 18 billion from the top 20. This is 2016 table of the top American pension funds. But guess what? Out of their 6 trillion in assets, they've only put 47 billion into venture capital. So this entire hype, this entire ecosystem that's powering the entire US economy is 0.77% of their portfolio. So think about that. We're not talking about going crazy here. We're talking about 0.77% of a prudent person's portfolio. Surely that can be possible in Europe. So for me, if you want to build a really vibrant digital economy, I'll let Seal end the argument. He used to say you have to go a little crazy if you're going to survive. I think if we want to survive, we have to go 0.77% crazy, and then perhaps we can get there. On to building the best internet. I have to move fast. I've only got a few more minutes. This is really important too. You can't have an internet economy without an internet. The EU is in the midfield, but here's some good news. Telecom competition policy really worked. Local loop unbundling gave us competition across the board through most of the EU countries. And there's another great benefit that came from that. Prices. This is USA broadband versus European. Look on the bottom left. Americans are paying at least twice as much for the high-speed broadband. That's because most Americans only have 1 or 2 broadband providers in their market. US telecom policy deregulated, investment sank, and the Americans are paying the price. So Europe is well positioned with a very competitive landscape to potentially power a better internet. Why is this important? Because all of the things we want to be investing in, machine-to-machine communication and other things, they're going to need a powerful internet. These are from the great Cisco annual reports showing, and these guys build the pipes, so they know what we need, and they have to project what we need. LPWA, you'll hear a lot about that. That's a nice way of saying it's low power wide area. It's your elevator talking to your home kit. This is the IoT. This is machines talking, and this is where a lot of the traffic is going to be coming from. It's where the next internet is going to be active, and it's really booming. In 5 years, we're looking at machine to machine being half of the devices that are on the internet running around. Another point, we need to foster the fair competition. I think we touched on it this morning. We did a study just this past year about some guidelines, because this is the question. Give me a toolbox. Yes, the platform models outperform. I'll move quickly through that. This is really the key thing. I think people have now realized we've got a new type of economy here. We need to look at it with a fresh eyes. The WhatsApp case really changed people's opinions about, okay, how are we judging if this is a good merger or not? We put this together with Roland Berger. This is part of our study. We tried to do a bit of a toolkit. Not all platforms are evil. In fact, most of them are great, and Europe needs more of them, and Europe has great ones. The problem is when you get up here to the bottlenecks, who can potentially unfairly treat those that are downstream on them. So on the very upper right there, you see legislation or application of law. This is really what we think is really crucial. We don't necessarily have a problem of not enough laws. We have a problem of not enough enforcement. of the existing laws. And this is why what Vestager is doing is so important. I'll slide ahead a bit. Again, this is in our presentation. We tried to come up with a toolkit so that regulators and politicians and others could try to grapple with these new market realities. It's not easy. There are new rules, but it's been around long enough we can start to really measure these things. So we got to build an economy of our strengths. I'll move really fast because I'm running out of time. The Lamy Commission has just said it this summer again. You've got to invest in R&D. Europe is just such a laggard. Here's the great news, though. Game is not over yet. This chart essentially shows you that the heart of German industry, which is powering its economy, has not been invested in by VC. Look at the very top. Industry's 31% of the German economy. It got 1% of the VC in 2015. Look down there. Retail trade, 3% of the German economy. It got the lion's share. There's a huge misalignment. That misalignment is now going to be corrected, and that's what's so great and makes me optimistic about Europe, is if we can start attacking those sectors and bringing capital to them and know-how, then Europe has a really, really bright future. As a result, VC has gone boring, if you will. A lot of the VCs around Europe are now investing in things like freight, logistics. They've figured this out now. Also, the giants of Europe have awoken in a way that you didn't see a couple of years ago. The corporate VCs, the big tech companies, they're starting to do a lot more. I really think like the message has come through. And this is where Europe really is strong. We can debate the ethics of AI, but it's coming so that the machines can talk to each other and solve our problems. And this is where Europe is strong. We have great research institutes, we have great universities, great talent. The sky really is the limit for Europe. We've just got to get the capital and the ideas and the right framework in place. And it is Europe's 10 trillion chance. Of course, McKinsey calculated this before the e-privacy proposal came out, so we can discuss it. But this is where Europe is strong, and it's all sitting there. It's a market waiting to be captured. This is where Europe has to move and move fast. And guess what? It's doing a pretty good job of it already. Slash Atomico's study again. Look at the red line for Europe. Kind of staying close to the US in terms of founding these type of companies. Look at the middle, same thing. But on the right, unfortunately, that's where it gets problematic. We're outspent 5-1. Yeah? We're sexy but poor. Great ideas, but then somebody else has more capital. They buy you. You can't close a round. That's the problem. Solve the finance problem. Finally, we need to win the talent war. This is pre-Brexit UK was way ahead at winning talent, where the tech workers came when they came into the EU. But actually, interestingly enough, where are they coming from? They're mainly coming from India and the US. As a result, this gentleman has changed things to some degree. There's already been a big chill effect of people in the US wanting to hire foreign workers, and as a result, Hired.com did a survey and found a lot of foreign workers are looking elsewhere. Will they come to Europe? That's up to us to make it attractive. So that's the recipe. Hopefully Europe will listen to what I say, because it's follow my recipe and off we go. But seriously, Europe has an incredibly bright future. I'm optimistic. I hope you are. So let's talk the rest of the day about how to get there. Thank you, guys.